India Inc. has a new boogeyman.
Multiple big companies have got notices from the Goods and Services Tax or GST department in the form of demand notices this year.
The Directorate General of GST Intelligence, DGGI, has slapped a 32,403 crore rupee notice on Infosys for services availed by the company from its overseas branches over a 5-year period starting 2017.
The GST department has sent M&M a notice questioning why it shouldn't pay GST for letting its group companies use the Mahindra brand name.
Being slapped on big Indian corporations. The latest ones being Mahindra & Mahindra, Bajaj Finance and Infosys.
The Directorate General of GST Intelligence has issued a show-cause notice to 10 foreign airlines over alleged non-payment of tax of about rupees 10,000 crores.
That's right. Over the last few months, GST officials have sent notices to real estate and construction companies over business with their special purpose vehicles, tech service providers over services supplied to them by their overseas units, foreign airlines over services provided to their Indian units, insurance companies over commissions and services to their employees, and a conglomerate over the use of its brand by its subsidiaries. Corporate India has critiqued this widely, even going to the extent of calling it tax terrorism. And of course, some of the notices, usually sent by local, state-level tax officials, do seem a tad arbitrary, and even in conflict with recent mandates laid down by the apex body, Central Board of Indirect Taxes and Customs. Now, agreed that GST is only 7 years old, but why is there a sudden surge in this range of new, varied and highly innovative tax demands being unleashed on companies across sectors in India? Is this a case of loopholes being exploited by the taxpayers? Or is it various levels of ambiguity misused by local taxmen? So many notices mean that there's obviously quite some litigation ahead. But won't it only aggravate problems? We try to bring you all these answers in today's episode. It's Tuesday, the 13th of August. From the Economic Times, I'm Anirban Chaudhary. This is the Morning Brief. My colleague Rashmi Rajput has been tracking this slew of notices. I asked her, what's up?
See, one has to understand what is GST. The GST is the Goods and Services Tax. It's a form of indirect taxation and it is paid on the services provided. Now, it is this definition of services that the GST department is exploring with various sectors, as you rightly said, whether it is the real estate, whether it's the insurance companies, the tech companies, the shipping companies, or the foreign airlines. The GST department is trying to interpret the definition of services in each of these sectors and trying to see if there is a case of making revenue. It is basically the department has a certain view on a particular issue, and therefore they say that this is our case. You explain us why this should not be the case. And the companies or the corporates are trying to say that this cannot be. This is not whether services can be attracted, where the revenue is attracted, and therefore it does not come under the realm of services, and hence the taxation is challenged. Now, let me give you one more example. Like in the real money gaming app case, the GST department is looking at a revenue of 1.5 lakh crore. So that's huge money that we're talking about. Now, in this particular case, what is the department saying? The department is saying that every time I place a bet, you have to shell out 28% as GST. Now, the companies are saying that that should not be the case. Like, for example, if I have 100 rupees, I'm placing a bet of 100 rupees. But I divide it into 4 times. I make a bet of 40, 20, 20, 20. So then should I pay 28% every time I place a bet? So the company is saying you take one time 28% taxes on it. But the government is saying for every actual bet that is placed, you take 28%. So this becomes an interpretational issue. And since it is a new law, I feel in many of these cases, it will either be the Supreme Court or the GST Council that has to define what exactly is the definition of services that concerns the industry or the sector, and how should that be treated. And only then the GST is applicable, how the GST would be applicable. Only once that clarity comes in, we will see, more clarity on the show cause notices that have been sent by the department.
Okay. Tell me about the Mahindra case.
So in the Mahindra case, what the GST department is saying that the use of brand name, that this is a new thing that the GST is exploring. So Mahindra has various other companies. So the GST department is saying that all these companies, since they're using the Mahindra name, there is a brand fee that is being paid, and therefore there's a service that is provided there, and therefore that attracts GST. Now this is similar to what has happened in the realty sector, where the builders, when they have a project coming over, what they do is they will give their name to that project, which is a special project that has been undertaken. And that the GST is saying that is also attracting services. So therefore, they're using the same logic to use a brand name. But of course, this is going to be because there are many corporates that use a brand name, but they are into various different sectors. So whether that is something that, the brand name should be only on the same sector, or whether it could be used by the other industries only, that is something that will be contested. And I feel even in this case, it will be either the Supreme Court or the GST Council that has to give clarity, because all these notices are getting challenged and they are before the various authorities. And once there is a clarity that, okay, this is how the GST is applicable, then this issue would be put on rest.
So we've discussed Infosys, and I wanted to ask you this. There is this notices, there is this set of notices that foreign airlines have also got because of services they provide to their Indian units.
Actually, this is different because then that becomes export of service, right? And this is import of service. And the GST has a very different definition on both these topics. Now, what happened in 2017, the foreign banks which were operating here, similar to what is the airlines case, this matter went to the Supreme Court, where they have given clarity on what is a distinct entity, whether the parent and the offshore company, whether how they are treated as distinct entity in the eyes of law. Now, what is the reason behind the tech companies which are coming under investigation is that there is no clarity on this definition of a distinct entity. So, therefore, these and one has to understand that export and import are two different units. So, the GST law, those look similar. It has to be defined. If GST goes by the circulars, the department follows every notices that it serves on the circulars that the department issues, the GST parent, which is the CBIC issues. So once if there is any kind of ambiguity on a particular legal term, that particular legal term can be explored. And that is what is happening in the case of the tech companies, where the import on services and definition of a distinct entity has not been defined properly. Of course, now they are contesting that there is a June 2024 circular which kind of gives clarity on this particular topic. But again, this case will go before the CBIC for clarity, and then there would be clarity for the industry.
Got it. That's very well explained, Rashmi. Now, what are these GST officials telling you? I mean, what is the intent behind, this sudden surge in tax demands that's, going to companies? Is it a hurry to meet deadlines of tax revenue, or what is it really?
See, GST department or any taxation department, they only have one love, which is the revenue. So they have to figure out which way they're going to make revenue and which way the revenue can be clocked in. But also one has to understand that they have a 7-year time barring period. Now we are in 2024. Therefore, the financial year, say 2017-18 gets time barred. So therefore, in 2024, the GST had to rush it and they had to send those notices. Otherwise, the revenue for 2017-18 cannot be clocked in.
And what are the tax officials telling you? Which are the other industries that they might go to next?
So actually, they have covered almost most of the industries. And it's a very interesting time because, the corporates, a couple of years ago, they used to not factor in GST while having any acquisitions, when they're having any M&As. But now what we understand is that when there is a deal which is in, the CAs and the lawyers, they all will think about where is the GST liability and who is going to bear this GST liability, who is going to pay for the GST liability, and when this will be coming up. So that is also worked completely now, which was not something which was earlier the case. The people who are preparing this document, they used to only look at direct taxation or the revenue implication from the income tax side, but now they also look at the implication from the GST side.
To understand the why of it and also the what next, I spoke to Dinesh Kanabar, a tax expert and CEO of Dhruva Advisors LLP.
So GST law is 7 years old and it got implemented. After the first implementation, people would file returns and those returns would be subject to an audit or a scrutiny. By the time the first scrutiny could happen, COVID came in. And therefore, for about 2.5 years, scrutiny did not happen. And therefore, the first real scrutiny of the returns which have been filed by the taxpayers started to happen only in the last 18 months. The second thing is that the law really, unlike the earlier laws which preceded it, where you had service tax and whatever else, it was specified as to what was chargeable. Whereas by its very composition, GST applies to all goods, all services, unless something is excluded. And the proposition is that if there are transactions between related parties and there is no charge, the question which arises is whether there ought to have been charged and whether therefore the taxman has lost out on account of not making payment for the charge. Now, what tends to happen is that given the sheer fact that GST is on your gross turnover, not on your profits, the numbers tend to become very, very large. And in today's date and time, when all listed companies are required to make a disclosure of any tax notices that they have received, it tends to become a big challenge.
Understood. Now, in the case of Infosys, sir, the notice seems to be in conflict with a mandate that was issued just weeks back by the CBIC. How do you see this?
The issue which arises is the inherent way in which our laws are drafted. Our laws, whether it is direct tax laws or indirect tax laws, really prescribe that the central authority cannot ask any officer to carry out an assessment in a particular manner. It is left to the field officers to do that. And when it comes to the field officers carry out their own interpretation. And I think that is one of the drawbacks of our entire tax system. That, that every officer is free to interpret and there is no central direction. And therefore litigations tend to burgeon. Possibly there is a need to inherently review. If I can give you a perspective from a global viewpoint, in UK, for example, if a notice is issued by a tax officer, it says so-and-so on behalf of the commissioner. So therefore it is the central commissioner who's being HMRC, which is being represented. Whereas in India, the officer is responsible for what he does and nobody else. And that leads to multiple interpretation. The law was introduced the way it is possibly so that there is no sort of interference in the work being done, etc. But it is resulting in multiple interpretations and there is a need to streamline that.
Okay, but can you explain this with another example perhaps? Maybe the case of Mahindra and the use of its brand by its subsidiaries?
I can't go too much into specifics because we are dealing with a matter with which I am personally sort of involved with. But the fact of the matter is that the tax authorities, in my own opinion, seem to be misdirecting themselves because brands are sort of evolved by combined usage by the parent and the subsidiary, and each contributes to the development of the brand. But really, it is these sort of issues which give rise to the litigation. Or, for example, you mentioned about real estate. Now, there is no GST on land. But the question is that if the land is given for development, is that a right and on which there is a GST or not? The matter has already reached the Supreme Court. So it's basically issues of interpretation which have arisen over the last about 18 months.
But is it natural for it to have so many contentious interpretations?
I think to expect there to be a law which leaves no room for interpretation is utopia. It doesn't exist. The issue, take Infosys, for example, as to whether there ought to be or ought not to be a reverse charge is an industry issue. As much as it applies to Infosys, it would apply to a Wipro or to an HCL or to whoever else. And question is whether CBIC in a situation like that ought to proactively come back with a statement to say, here is what we have verified with the Ministry of Law, and this is our stated position. Then what happens is that individual litigations may not take place. Now, there may still be an issue where one may not agree with the interpretation given by CBIC. But that is not really the issue. Then at least one knows that there is a considered thing and it is not an individual officer who's going about doing the interpretation that they would like.
But given the number of notices that have come, there's likely to be plenty of litigative activity now, no?
The answer is that yes, absolutely. It is actually happening. So one is, of course, the authority for advance ruling to whom you go for interpretation. And there again, the judgments which have come from the authority for advance ruling have been negative, then gone to the central authority for advance ruling and again to the courts. So that is one level of litigation. Other is the interpretation at the time of audits and assessments which are happening. But in the case of Infosys, it was, of course, a pre-show cause. But otherwise, there is a rampant litigation happening all the time.
Also, sir, finally, just wanted to understand, what do you say to so many people from India Inc. that are calling it tax terrorism?
It's a way of how you express yourselves. I don't think there's anybody who's trying to terrorize, but it's a question of what I mentioned to you earlier, that if each officer is allowed to interpret the law the way he or she thinks it ought to be, then you will have conflicting stands taken by people across the country. So the same software industry, you cannot have a situation is treated in a particular manner in Karnataka and another manner in Delhi or Gurgaon or wherever else. Now, you are leaving it to individual officers to interpret. There is no central direction. So, for example, if there was a proposition to say that if you issue any demand more than X amount, then you need to take a pre-approval of CBIC, then you would come to a very different proposition. So I think there is a degree of tax terrorism. Let me put it this way, it is certainly not leading to ease of doing business. It is painting the country in a poor light. The government really needs to understand that taxpayers are the people who are contributing to the economy, to the growth of the economy, that they have their own rights, they need to be serviced in a particular manner, and issues need to be addressed quickly. It takes years and years and sometimes decades to resolve a matter. It goes on all the way to Supreme Court. We need to find a mechanism to resolve disputes quickly and expeditious.
And until such a mechanism is found, things will continue to get more convoluted before they get simpler. Now, needless to say, the government earns a whole lot of revenue from GST. In fact, collections in FY24 touched a record 20 trillion rupees. That was an over 11% jump compared to the previous year and a 3-time surge compared to FY18. What seems to be happening now is local GST officials rushing to meet or exceed what have to be constantly forward-moving GST collection targets. And yet, it's not like all sections of the government are in support of this mad rush to fill its coffers with tax revenue. In a recent letter to Finance Minister Nirmala Sitharaman, Transport Minister Nitin Gadkari said GST on health insurance premiums, for instance, should be slashed, as it was akin to putting, and I quote, high taxes on the uncertainty of life. The letter was leaked to the media and it created quite the furor in Parliament. Here's Sitharaman in a recent Parliament session.
Prior to GST coming in, every state levied taxes on the premium collected on insurance to just make sure an opportunity which came by their side because some minister wrote a letter and somebody who was a part of the delegation who, without the permission of the minister, put it out in public domain.
The tax slab is now being reviewed by a committee. It will then go to the GST Council, which will decide whether to slash the taxes. Why am I saying this? Because this and many such issues still need to be ironed out in the GST tax regime. How and when? Let's keep a watch, shall we? That's it for today. You were listening to this episode on The Morning Brief. It was sound designed by Indranil Bhattacharjee. A new episode of The Morning Brief drops every Tuesday, Thursday and Friday on a listening platform of your choice. Next Thursday, that's the 15th of August, the Economic Times podcast drops a new show. 7 at 7 is a news capsule that gives you 7 pieces of news from the world of business, finance, Indian and global markets, and much, much more. It drops every day at 7 a.m. Set your playlists and keep listening. This is your host Anirban Chaudhary signing off. Have a good week. All external news clips used in this episode belong to their respective owners. Credits are mentioned in the description.